how to buy 6% agency bonds on Fidelity step by step. And we actually buy any of these for our personal portfolio. That's what I'll be walking you through in today's video tutorial. Hello, Super Saver. I hope you're healthy and well. For the members and Super Savers in our community who are already familiar with agency bonds, I've included timestamps in the video description below so that you can skip ahead to the step-by-step tutorial. I've repeated this many times on the channel, and most of the Diamond Nest Egg regulars already know that I can be repetitive at times. But hey, it works. I'm of the opinion that rates are still trending upwards. More on this towards the end of the video. So the screenshots for this tutorial were based on a 6% new issue agency bond from Federal Home Loan Banks over July 4th weekend. 1 week later, as we're about to air this episode, 6.15% is what the latest new issue agency bond from Federal Home Loan Banks is going out at. Trending upwards indeed. For those of you new to agency bonds, they are debt obligations issued by a federal government agency other than the U.S. Treasury or by government-sponsored enterprises, GSEs. Agency bonds are considered a bit riskier than U.S. Treasuries, but generally speaking, that's also one of the reasons why they offer a bit of a higher return, especially if you look at the longer maturities on the agency bonds here, relative to those on U.S. Treasuries here. Agency bonds are nonetheless still perceived to be relatively safe, relatively low risk when compared to other types of fixed income instruments, such as munis, corporates, and junk bonds. Not all agency bonds are the same though. So here's the summary table that I created for our latest member video on agency bonds, which should help simplify your agency bond journey. Feel free to pause and or rewind as needed as you go through this step-by-step tutorial on how to buy agency bonds from Fidelity, because as usual, there is a lot of detail. And as usual, here's a front of video disclaimer. For a detailed disclaimer, please refer to the end of this video. Do note that the step-by-step tutorial walks you through how to buy new issue agency bonds on Fidelity, not existing ones that are already trading in the secondary market. Many of you already know that I have a general preference for buying new issue treasuries at auction because 1. There's zero transaction fees if you do this online via one of the leading brokerage companies such as Fidelity, Schwab, and Vanguard. And 2. I like getting the same price as the big guys who are buying tens of millions of the same security, even if I'm buying significantly less. Similarly, that's why I prefer to buy new issue agency bonds. Moreover, unlike with treasuries, it seems all the big brokers do charge for agency bond trades on the secondary market. The standard fee appears to be $1 per $1,000 face amount, capped at $250 maximum. And depending on the broker, there may also be a minimum fee per secondary market trade online. Plus, if you call in to place your purchase order via phone, the standard speak to a human being premium that your broker charges will apply for both new issue purchases at auction and secondary market trades. Right. Now, let's dive into the step-by-step tutorial. So once I've logged into my Fidelity account, I'll click on News and Research. And from the pull-down menu, I'll select Fixed Income, Bonds, and CDs. From the Fixed Income, Bonds, and CDs page that appears next, I'll scroll down and select New Issues. Then I'll click Agency GSE. And as always, I then choose the one from the list that best fits my risk-return profile, my time horizon, and other personal preferences and expectations. For the purposes of this tutorial though, I'm going to go with this one here because it has the highest yield and because quite a few members and Super Savers reached out with questions and comments on it. This specific bond would also make more sense for someone who lives in a place with relatively high state and local income taxes, as I do, because the interest earned on agency bonds from Federal Home Loan Banks are exempt from state and local income taxes. Do note, though, that the interest earned on agency bonds from Freddie Mac, these two here, are not exempt from state and local income taxes. Moving on, I can also see that all of the agency bonds on this list are rated AAA by Moody's and AA plus by S&P, the same as U.S. Treasuries. Now, unfortunately, All of them are also not call protected, meaning the agency can choose to repay the bond early, usually subject to a minimum no call period. And if I click on this no here, this box will pop up. I can see that this agency bond is callable after January 12th, 2024, and that it's continuously callable. This means that the agency bond issuer can call it whenever they want after this date. There is no set call schedule that they have to follow. If it weren't continuously callable, then there would be a set schedule here with the different call dates. Right, so going back to this original screen, I can click on the agency bond itself to learn more, which you should always do to make sure you understand what you're buying. And from the screen that pops up, I can check the name of the agency bond issuer, the coupon, and the maturity date. Here's the CUSIP and the fact that the 6% coupon is paid semi-annually, meaning 3% for every 6-month period. Remember, rates on fixed income instruments are quoted on an annualized basis. I'll go through all these dates here as well. And when I'm done, I'll scroll down and make sure that I'm okay with everything down here. We've already gone through the call protection features and schedule, but I can always reconfirm here as well. Also note that the coupon rate is fixed. The agency bonds we've looked at recently have all had fixed coupon rates, but it's worth double checking because this may not always be the case. Here it shows that this agency bond is federally taxable, which is the norm. And also very important down here is the minimum investment amount and the incremental investment amount. This 10 means that the minimum investment amount is $10,000. And this 5 means that the incremental investment amount is $5,000. So all in $1,000 increments, meaning that if I want to buy more than $10,000, the next possible purchase amounts are $15,000, $20,000, $25,000, and so on. Based on our experience, these are the standard minimum and incremental investment amounts for agency bonds from Federal Home Loan Banks. Freddie Mac agency bonds like these two here from the original list seem to have lower purchase requirements with the standard minimum investment and incremental amounts set at $1,000. So when I'm ready to buy this 6% coupon agency bond from Federal Home Loan Banks, I'll click on trade here, or if I'm on this screen from before, I'll scroll back up and click buy, which will take me to the following screen. I'll check that this is actually the agency bond that I'm interested in purchasing. Here, I'll choose the account that I want to buy in, and here I'll enter the quantity. Remember that one bond equals $1,000 face value. And then I'll scroll down and click Preview Order. And on the screen that appears, I'll reconfirm that everything is correct, including everything in this section below. And if I have to change anything, I'll click Edit. If not, I'll click Place Order. And there you have it, folks, how to buy a 6% agency bond that's exempt from state and local income taxes on Fidelity. You should know that this video was created because quite a few of our members and super savers requested it. I didn't actually place the $10,000 purchase order for the 6% coupon agency bond with Fidelity. But to be fair, these went pretty fast, it seems. I picked up a quick, literally less than 5-minute phone call just as I took this screenshot that I shared with you earlier. And when I went back, the new issue was already gone. But personally, I think there will be more, perhaps even higher yielding ones in the coming months. As I've discussed in previous agency bond videos, we're not adding significant amounts of agency bonds to our personal portfolio at the moment because we think interest rates will continue to trend upwards. In fact, Fed Governor Powell has already stated that 2 more rate hikes are expected for the coming months. Plus, I want to keep our fixed income portfolio fairly liquid with shorter maturity T-bills. But as I always say, everyone's financial journey is different. Check out this video here for the questions you should ask yourself to determine whether moving into agency bonds may be a good fit for you. And for an even deeper dive into agency bonds so that you're as well versed as possible on the subject matter, check out this Agency Bond 101 video here in our member zone and pencil in our first live members Q&A this month on July 14th at 5:30 p.m. Eastern Time. Click on this join button on our channel page or the join link in the video description below for more details about Diamond Nest Egg membership. And if you have specific questions related to the taxation and suitability of agency bonds in your portfolio, my general recommendation is to consult a tax and/or financial advisor who understands your individual circumstances, preferences, and expectations. All right, Super Saver, as always, I hope this video was educational and that you learned something new. If you did, don't forget to share with those you care about and hit that thumbs up, and see you again very soon with more brand new wealth building content for your financial journey.